topics and opinions expressed in the following show are solely those of the hosts and their guests and not those of W4CY Radio, its employees, or affiliates. We make no recommendations or endorsements for radio show programs, services, or products mentioned on air or on our web. No liability, explicit or implied, shall be extended to W4CY Radio or its employees or affiliates. Any questions or comments should be directed to those show hosts. Thank you for choosing W4CY Radio.
Welcome to the Ask the Expert show on W4CY Radio and Talk4 TV, where we bring you educational information from top local experts in the fields of legal, health, financial, and home improvement. Now sit back and listen to experts in family law, association law, hearing loss, business brokers, home care, along with many other topics. Now here are your hosts, Steve-O and Sophia.
Hey, good morning. Welcome to another Ask the Expert show, where for the last 17 years, we have brought you the finest experts in the field of legal, health, financial, and home improvement. You know what? It seems like every time something big is happening in the money market, this show comes up. It's just perfect timing. And we couldn't ask to have anybody better than the Provise Management Group and Ray Ferrara, our long time expert. Ray, a lot of stuff going on. Good morning.
Good morning, Stephen. There certainly is. And what a beautiful day we have here in Tampa Bay. And all is good on Mondays.
We want to welcome our new TikTok listeners and viewers. And I got to tell you, a lot of you people received promotion about this show thinking it's the first time, but we have actually made this show into a national show now. So we're going to be broadcasting this throughout the country. This show so deserves it. And we want to thank you for all your emails, your letters, now with the TikTok people. Ray, again, this is a huge audience now joining us. So tell people about Provise Management Group.
Well, Stephen, thank you for the opportunity to do so. Provise Management Group is a financial planning firm based in Clearwater, Florida, with an office in Tampa. Although we are serving clients in over 30 states, managing about $2 billion on their behalf. And our emphasis is always on the financial planning side, not the investment management side. And people really scratch their heads and say, why? Well, we believe that once we understand the goals, the dreams, the aspirations of those 1,200 families that are invested with us, that we're able to better manage the portfolio. And so that's why we place the emphasis on financial planning. And as a fiduciary, meaning we have to place our clients' best interests ahead of our own, we think that's the best way for us to properly work with clients and to invest their money the best way possible on their behalf. So we always offer to our listeners a complimentary 1-hour consultation in either our Clearwater or Tampa office. And for those that are around the country, we are very accustomed to working with either Zoom or Teams. So all you have to do, if you'd like to meet with me personally, is to reach out to us by calling 1-800-633-3049. That's 800-633-3049. Say that you'd like to schedule that 1-hour complimentary consultation with me, and be delighted to sit and visit with our listeners around the country.
So, Ray, I'm going to knock on wood. I think you've been with us for about 5 years, maybe longer. People see Provise Management Show coming up, and I got to tell you, in 5 years, again, I'm knocking on wood, we have never had one negative. And, when it comes to managing people's money, that comes really close to home. We've never had anybody with one derogatory anything about Provise Management Group. That's amazing.
Well, Stephen, we work very hard on behalf of our clients. Our research is deep in the things that we do. We have 14 advisors at Provise, all of whom have a certified financial planner designation, which is, in my opinion, the highest designation that exists out of the some 200 plus that are claimed to be designations within the financial community. And so thank you for that. I'm knocking on wood myself. Let me just knock over here. We don't want to get that first one, but we do envy our reputation, and it's something we work at hard. Once you lose somebody's trust, you don't get it back, and
Exactly.
so you have to work every day to maintain it.
And Ray, it just reminded me. I've shared with you before. I was a sports agent for many years. The smartest thing I never did is try to handle their money like a lot of agencies do. But I sent to a big company one of my clients to, and I felt comfortable. And believe it or not, they did maybe 10 deals together. Everyone profitable but one. And my client was so upset on the one instead of the 9 that he did incredible with. It's hard to please people.
Well, the world of investing is one of risk. And I would love to tell you that every time we have invested money that it's all gone up. It doesn't work that way, in spite of all of the heavy research and work that you put into making selections on individual investments. But as you've heard me say before, the stock market is like a man walking up a flight of stairs with a yo-yo. And we all have a tendency to watch the yo-yo going up and down and fail to realize that the man is continuing to climb up the stairs. And so there's going to be times when things will be down, but over the long run, we believe that the investor will continue to climb those flight of stairs.
Well, we got to get to one of the biggest topics. Kevin Warsh has now been confirmed as the new chair of the Federal Reserve Board. And everybody wants to know, first of all, your feelings on Kevin Warsh.
Well, Kevin Warsh is a very intelligent individual, and particularly in the world of finance. He's already served on the Federal Reserve Board previously, and he brings that experience. He's a proven scholar in the work that he has done in the field of finance. So, from a politics aside, from a qualification standpoint, he's unquestionably qualified to do the job. There's a lot of concern about him, however, being a puppet to the president. The president has been calling for lower interest rates ever since he was inaugurated January a year ago. Powell and the Open Market Committee have resisted those cuts, except for a couple that they did in the fall. Certainly haven't done anything since then over the last 6 or 8 months. And so everybody thinks that Kevin Warsh is going to come running into the meeting, charging to lower interest rates. I think he's too smart for that. I don't think he'll do that. And as much as the president might like to have a cut at this meeting, I think it's probably too soon for Warsh to be able to actually get the committee to agree with him. I think he'll try to set the stage. What he has really proposed to do is interesting in that he wants to cut the balance sheet of the Federal Reserve by selling off some of the assets. And in doing that, that would likely cause long-term interest rates to go up. while at the same time he wants to cut short-term interest rates, which would take the yield curve and make it more disperse, which is sorely needed to have. You do not want to have lower interest rates, short-term interest rates higher than long-term interest rates. While it's not a flat curve or an upside down curve, it clearly probably could be greater spread between short-term interest rates and long-term. And in fact, we saw some pretty significant move in interest rates last week, with the 10-year Treasury jumping from about 4.3 to a little over 4.5%. Doesn't sound like a lot, but in the world of bonds, that's huge to occur within a week. So, summarizing our thoughts, we think that he will, begin to educate the committee on what his thinking is at this meeting, maybe even into I think the next meeting will be in late July or early August. But I would think by fall, he will have convinced them to lower interest rates. Hopefully, the war in Iran will be over. The price of oil and gas will have come back down. That will take some of the pressure off of inflation, which has now gotten to be over 3%. And I think that will be a better timing for him to be able to advance his ideas. So we'll see what happens. It's always what we don't know that jumps up and bites us. So we'll have to wait and see. But that's our best thinking at the moment. We don't look for an interest rate cut at this meeting, maybe one at the following meeting, but most likely the first one in the fall.
Now, does Powell remain on the committee?
Powell has chosen to remain on the committee. It's an unusual move, but it's not unprecedented. There was a Federal Reserve chair back during the Truman administration, the Truman years in the White House, that decided to stay on the committee. I think Powell is staying there not so much as to be a shadow chair behind Warsh, as it is to make sure that he's part of the discussions, and particularly since there have been charges levied that are being investigated by the Department of Justice regarding whether he was truthful in his testimony before Congress last summer regarding the Federal Reserve building and the cost overruns. So I think he's doing it to protect himself. And interestingly, one could argue that he's actually going to provide cover for Kevin Warsh by staying on the committee for a period of time. I would be surprised that he would step out of line, either privately or publicly. He's too classy a guy, in my opinion, to do that. And so I suspect that as soon as the charges are dropped and things reverse, that he'll find a proper time to step back and resign.
Ray, God, the stock market still continues to rise. And are you surprised? I mean, we went over 50,000 the other day.
It's been a very interesting ride during these first almost 5 months of the year. Late last year, we started to see value stocks start to come around, and the market was to broaden on the equity side, which was a good thing rather than being just that magnificent seven. More recently, during late March and April, and even into May, those companies, the Mag 7, have continued to lead the market in spite of the fact that a company like Microsoft is down for the year. The others are doing extremely well. So I would not be a bit surprised to see a pullback in the market come here, let's say over the summer, something that might draw down even as much as 10%. And this is assuming no events cause it to happen on a temporary basis, but that it kind of corrects itself. But there's two things that, but still think at the end of the year it'll be higher than where it is today. And the main driver of prices at the end of the day, besides enthusiasm, is earnings. And a good friend of mine is a money manager here. And for the 30 some years that we've known each other, he always has said earnings determine market price. And in fact, he named his company that way. The earnings are very strong, much higher than what everybody expected. We expected good earnings, but they're coming in much better. And if that continues to be sustained, then the market will do well in spite of a pullback that we would expect to see sometime, let's say, between now and Labor Day.
So there's a lot of people out there worried about a big drop happening. So you don't really see that happening?
No, we do see the yo-yo going down
Yes.
between now and Labor Day, but we see the man walking up the flight of stairs one step higher by the end of the year, with the yo-yo having gone back up. So a little consolidation to take place. Some people take some chips off the table. Some people who want to rotate out of something that's done extremely well into something that they think will do better going forward. And that will be the things that we think are likely to happen between now and Labor Day. But as I said, at the end of the year, and this assumes, of course, that the Iranian war is resolved fairly soon, that things will be looking awfully good by the end of the year and into 2027.
We just got a TikTok question in. TikTok, they don't tell you where the person's from. Actually, they kind of give you their handle. This is from Richard in Boston Rich. So I guess he's from Boston. I just found your show. I am enjoying it. How is your company different from other money management companies?
Well, Richard, thank you for the question. And if you're in Boston, it's one of my favorite cities to visit. Love it up there during the summertime, not January, February,
Right.
March. I like staying here during that time. So I will tell you, our difference goes back to what I mentioned at the beginning of the show. We are financial planners first and foremost. There's a lot of people that say they are financial planners, but they're selling product. There's a lot of people who say they're financial planners, and really all they do is gather assets. And so our distinction is that we actually believe in doing financial planning, and virtually all of our individual and family clients at the beginning of a relation has some type of a written financial plan done. It might be a full-blown plan. It could be just a segment on retirement planning. But whatever it is, it's based on your hopes, dreams, aspirations, your goals, and that's the direction that we go, and that's our differentiator. We used to also say that because we're fiduciaries, that's a differentiator. But we've been doing that since the late '80s, when it was not novel. Now today it's caught on, and lots of folks are doing that, and that's a good thing for you and for anyone that is investing with someone. Be sure to ask them if they're a certified financial planner. I mentioned earlier that all of our advisors are. We don't let anybody speak with clients on financial planning that are not a CFP professional. So those are our differentiators. And at the risk of bragging just a little bit, Richard, our retention of clients has averaged something north of 97%, having lost about maybe 2.5% to 3% of our clients per year for a variety of reasons. They move, people die. There are those that just say they don't need us anymore. Maybe they want to do it with AI. Whatever it is within our industry, that's an extremely high retention. And if our clients were not happy with us, retention would be significantly lower. So it's something of which we are very proud. But again, directly to your question, we don't just call ourselves financial planners. We actually do financial planning.
Let's go to Atlanta. I am about ready to retire, and I have 3 different 401k programs from previous employers, as well as my IRA. Any reason that I shouldn't consolidate these into one?
So as often is the case, the answer is it depends. First of all, if you are retiring, one of the primary things that we encourage clients to consider doing is to simplify their financial life by consolidating accounts. And clearly, if you have 3 accounts with different employers over the years, it's something that you really need to look at in consolidating them. Now, you could consolidate them by transferring all of them into an IRA. And the considerations that you have there would be, you've got to look at what are the fees and expenses that might be involved in that kind of a transfer. What kind of investments are you going to be looking at? Are you looking at somebody who's trying to sell some very high-priced annuities? You could also look to transfer all of the money into one of the 401ks if you would like to do that. And you said you're about to retire, so that might be an alternative for you to consider, and then maybe look at the IRA once you, in fact, do retire. Okay, so here's the important part, however, is that you should get an analysis done by someone who will compare staying where you are versus making the change, so that you can see whether it's really in your best interest. And work with someone who's a CFP professional, and they should be able to provide you with very good advice.
Ray, how do people reach you?
Provise Management Group can be reached at 800-633-3049. That's 800-633-3049. Go to our website, provise.com. That's PROVISE.com. Check us out. And as I mentioned earlier, we always offer our listeners a complimentary 1-hour consultation with me, not with somebody else in the office, but with me. And again, all they have to do is call 800-633-3049.
Ray's with us twice a month. We're now national now with his show. Ray, thank you so much. You've always got the greatest advice, and we got a lot of questions we weren't able to get to, but we will do it on your next show.
We'll look forward to it in 2 weeks, Stephen. In the meantime, be safe and be well.
Thank you. That's Ray Ferrara. Folks, I'm telling you, if you need a money management company, they have been with us for 5 years. Give them a call. We're going to go to a quick break, and when we come back, we have our personal injury show. We'll be right back.
Thanks for tuning in today to the Ask the Expert show on W4CY Radio and Talk4 TV. Tune in next week and every week to hear more from our experts on personal injury, insurance, air condition repairs, estate planning, Medicare, and many other topics in the areas of legal, health, financial, and home improvement. See you next week.